The key difference between the treatment of fixed manufacturing overheads under absorption costing and variable costing is that fixed manufacturing overheads is included as a product cost under absorption costing. However, under variable costing, the fixed manufacturing overheads are treated as a period cost, meaning that they are expensed immediately. So why profit can differ between the two methods, right? So profit can differ because of inventory. So under absorption costing, remember the fixed manufacturing overheads are stored inside inventory, right? So if we don't sell all the units, some of these fixed manufacturing overheads will still be sitting under the number of units that were not sold and will not be expensed. Because remember, under fixed manufacturing overheads, what basically happens is the fixed manufacturing overhead cost is included in the cost of the product or in inventory, the value of inventory, and they are only expensed when inventory is sold. They are expensed under the cost of sale or the cost of goods sold, right? So that's basically a flow under absorption costing, that the fixed manufacturing overheads are included in the product cost or in the value of the inventory, and they are only expensed when the inventory is sold. Meaning that if we produce units in this current financial year and we store those fixed manufacturing overheads under the product cost or under inventory, if we don't sell those units in this specific year, it means that they're not going to be expensed in this specific year, right? They're only going to be expensed in the following year when these goods are sold. However, remember, under variable costing, we expense all this cost immediately. So that's what causes the difference between the profit under absorption costing and variable costing. To say, under variable costing, we expense all of them immediately. However, under absorption costing, we store them in inventory and we only expense when these units are sold. So if we don't sell all of them in this current financial year, it means that some of these fixed manufacturing overheads won't be expensed this year. Therefore, it will cause the profit to differ between the two methods. So really important to understand the flow of these fixed manufacturing overheads in the two costing systems. So here's a simple rule to remember. If we do not sell all units produced in the same year, absorption costing profit and variable costing profit can differ, right? Because remember, here, not all costs will be fixed. Manufacturing overhead cost will be expensed because they'll be sitting under the closing units of inventory. However, here they are all expensed immediately or in the same financial year. So why? Because some fixed manufacturing overheads is kept in closing inventory under absorption costing.